StockPulse Newsroom, talking Lithium Chile today. LITH, Toronto Venture Exchange, LTMCF on the OTC markets in the States. As they've been in the news lately, raising a bunch of money here. And I've got Steve Cochrane, the CEO, to give us a little overview of the company. Steve, appreciate you taking the time here. Well, you got a robust treasure here, and looks like you got a JV going. So, why don't you get into that for investors? Looks like a good fit for you, huh?
We're a growth story. We're a mining story. Obviously, the challenges and why we really appreciate people like you, Rob, is getting the story out, right? I mean, there's a plethora of stories out there today. People are inundated with lithium stories just because the sector is so hot. I'd like to point out, though, that we started this process. We started this journey back in 2017. So we're one of the survivors. We had some pretty lean years, as you know, downturn in the lithium market that took place in 18 right through 2020 wiped out about 80% of the listed lithium companies at that time. We're one of the 20% that managed to survive, and that's put us in a really good position to take advantage of the current rally in lithium. We're a news story, but an old story at the same time. So just the opportunity to tell your listeners and your viewers a little bit about us is great, and I really appreciate it.
Yeah. Let's get right into it. Lithium. You mentioned hotter than heck here, and the being a survivor, I think, is a good thing. Only the strong survive. So investors might just want to rally with you here, Steve. So let's kind of break down the deal here. Walk us through here the lean years, and then take us into current day here.
Well, I mean, it's a very interesting story. It's a very large story, but just to kind of sum it up, the company existed from 2013 on in Chile. The backbone is VP Exploration Terry Walker, who's lived and worked in Chile since 1991. He started the company as a copper gold company. And then in 2016, there was this surge in lithium interest. Tesla, if you remember, just got it rolling, and EVs and the whole climate change had just started going rolling. So at that point in time, lithium had moved from its 5-year average of about 6,000 US to 26,000 US in 2017, early 2018. So that price move drove a lot of interest in the whole lithium space. Terry, and to understand, the highest quality brines in the world come from South America because they're sitting in aquifers, underground aquifers, much like an oil pool. Mother Nature has done the work and leached out these lithium salts. So they're lying in these underground saltwater pools, and they're a very high grade and they're very low cost to produce. So South America has always been a very attractive area for lithium exploration and production. And if you look at the lithium being produced in Argentina and Chile currently, those two countries are number one lithium producer in the world. Pure numbers, Australia is number one as a country, but if you look at the combined lithium production of Chile, which is number two, and Argentina is number three, they're number one in the world. So Terry, our VP, saw this surge in prices and interest and went and staked a number of lithium projects in Chile. And that was our first advantage. He staked it. So in 2017, 2018, where companies were paying $800 a hectare to buy lithium claims in Chile, we had an average cost of $3, which is essentially staking costs, right? So we got this great portfolio of properties put together. And in 2017, they came to me. My career is in investment banking. I took this company public. They came to me in early 2017 to find a president that could, move this whole project forward. The feedback I got from people I introduced them was this is a great project. So, call it a midlife crisis. I offered my services, I took a leave of absence from the banking side and said I'd like to take the project on. That was 5 years ago, and here I am. So the first year and a half was great. Everybody loved lithium. We raised a considerable amount of money, I think $12 million over the first year and a half. And we began to expand and do some early stage exploration work in our Chilean projects. And then prices collapsed in 2018. They bottomed out in the fall of 2020 at 4,500 US per metric ton. So remember, they've been 26,000, dropped to 4,500, put a lot of guys out of business, and everybody thought the lithium story was dead. Lo and behold, unbeknownst to the market as a whole, sales in EV vehicles were accelerating far quicker than anticipated. That sort of 3-year drought of investment in lithium space created this huge imbalance between supply and demand. So beginning in really the fall of 2020 and really continuing to this spring, global lithium prices went from 4,500 to close to 80,000 US per metric ton, 3 times what they were at the previous peak. And if you look at it compared to all other commodities, even oil and gas, lithium was the number one performing price-wise commodity in 2021 and early 22. That's stabilized a little bit now. We're sort of sitting. I always look at Chinese pricing because China is responsible for 80% of the battery manufactured in the world. And even the batteries they don't manufacture, they manufacture the lithium that's a storage unit in batteries that they sell to Korea and Japan, which are number 2 and 3 battery producers. So price in China is real indicative of the true pricing, true demand of lithium globally. So it went from the low would have been about 40,000 renminbi per metric ton to the peak was 500,000. So we're trading at 473,000 renminbi per metric ton now, which just, in my mind, shows there's still this huge demand for batteries. So that set us up for a great 2021, and our stock had rallied from 20 cents to a high of $1.15. A lot of volatility in the junior mining sector, as you know. The junior mining investor tends to be, in here and out there. So we had some volatility, but we started to attract attention again in a serious way in the fall of 2020, spring actually, and then in the fall of 2020, when we announced the deal on a joint venture in Argentina. And what was interesting about this play is they'd already made a discovery. Our earn-in was to drill a production test well. So they knew that there was a lithium-bearing zone. What they weren't sure of is the commerciality of that potential zone and the potential resource that resided there. So we agreed for $800,000, we would put a production test well in, and lo and behold, in February of this year, we were pleased to announce we have a discovery. Not only a discovery, but a commercial discovery. Our initial one well resource was 1.4 million metric tons, huge find. And that was based on, sort of a lower grade, but huge flow rates. So we're right off the bat, that put us on the radar of a lot of companies, particularly lithium users, battery manufacturers, EV manufacturers. And in January, we were approached by the second largest lithium processor in all of China. They process 60,000 metric tons of lithium carbonate a year. And they were interested in us enough to invest $3 million. We did a private placement. It was being done at 70 cents. They wanted it all, but unfortunately, about half had been spoken for, so they wound up doing a $3 million investment. We spent probably most of February just getting to know them, getting to know us. And then 2 weeks ago, they sent their top 3 technical people to our Argentinian project. We drove up. I was there. 2 other, one of my VP, Michelle, who you met, was there. But their technical team loved what they saw. We love what we saw. I think it's a real world-class potential lithium deposit. They were excited enough that they came back and they said, we want to take our investment in you from 5% to 19.86%. It's basically as high as they can go without making a follow-up offer to all the shareholders. So it brings them just underneath that control sort of number. And they were prepared to do it at the time at premium to market, 95 cents. And they wound up investing $34 million in total into us. So it's the single largest investment we've had. it's a huge vote of confidence, if you like, that the second largest processor. And the other interesting fact is BYD, which is the largest EV manufacturer in China, now owns 5% of Shenzhen Lithium, that owns 19.86% of us.
You guys, well.
So we've got the whole supply chain. We're the mines, we've got the processor, and we've got the EV manufacturer. So I think it's a great vote of confidence. I think it's a huge testimony or testament to what we have. And I see it as a long-term relationship. So we are probably one of the best capitalized junior lithium mining companies, I would say, in North America for sure, arguably the world today. We have in total with the Shenzhen investment, 43 million Canadian cash in the bank. We have no debt. We have a great portfolio on both Chile, more exploration-wise, but this production property in Argentina. We have the money to advance both projects, all of our projects. But we also have enough cash now to take advantage of opportunities. This downturn in this market, the overall market turmoil, the global turmoil is going to create, I think, opportunity. We're in a good position to take advantage of it.
Boy, I'll say some guys buy a Corvette, but you decided to buy a lithium company. So I like that deal. So yeah, let's build on the future here, Steve. No respect for the juniors here last couple of years, it seems. Yeah. Obviously lithium's in a good spot. Precious metals can't really figure out which way they're going, but I think one thing's certain here: the global supply chain is under duress. And I think getting these precious minerals out of the ground will be king. So again, you're sitting on a bunch of cash here. What's the game plan?
Well, right now, we are going to first and foremost expand that resource, because that's going to be the true value generator near term. I mean, if you look at the last two deals in our space, one company went for $500 million with 4.1 million metric tons. That was a Millennial Lithium. The second deal went for $1 billion with 6.2 million metric tons. That was Neo Lithium. So we have a 3-hole program planned. It's designed. We've applied now for our environmental permit, which covers drilling and road building, everything. It's a 2-year environmental permit. We submitted that on February 22nd. We expect it to come any day, and then we can start these 3 holes that we see as expanding that resource, hopefully, and with support of our engineering firm that did our initial resource report, that we think we could take this property to 4 to 6 million metric tons. It's a very big property, 233 square kilometers. We're in the heart of the Salar. So we're very confident that near term we can double, triple, quadruple those numbers. That in turn should add, everything being equal, should add significant value overall to our market cap. So that's near term. We've got projects on the go, in one that we're working on ourselves in Chile. A great opportunity for us. Second largest salar in the world, straddles Chile, Bolivian border. We're advancing that. We've also been approached, because of the interest in lithium right now, by 3 or 4 companies that are looking for lithium projects. One we announced recently with Monumental on one of our properties in Chile. But I'm pleased to say there are a number of other potential JV partners that are very interested in working with us. So we'll have part of our properties being advanced by other groups, and we'll be focusing on our resource property here in the near term, with the idea that we can add significantly to our value.
Wow. Much to pay attention to, my friend.
Well, and one thing is, and you touched on it, we're in a sweet spot right now. We're popular because it's politically the right thing to do, right? I mean, you look at climate change. Climate change really started the whole process. How do we reduce that carbon footprint? Well, getting internal combustion cars off the road is a huge step. So that started the ball rolling. But I think you got to look at this Russia-Ukraine conflict as accelerating it. One, gas prices in the States are at all-time highs, $4 or $5. a gallon, all of a sudden there's an economic incentive. But the second reason too is people want to wean themselves off Russian oil, right? I mean, all of a sudden, unfortunately, that's become a four-letter word, and so as people turn away from buying Russian oil, electric transportation becomes a great option, right? So I think for the next 2 or 3 years, the lithium market's going to stay very, very buoyant.
Steve, real pleasure, and I'll look forward to chatting again in the future. So you take care.
All right, cheers.
Cheers.